Welcome to the Broken Pie Chart Podcast, episode number 95. I'm your host, Derek Moore, and today we've got a special guest on who's going to be talking about really some interesting topics, I think, in finance, in the brokerage space, and really plays in well to a lot of things that I've been talking about, getting started, becoming investing. And Viktor Nebehaj is our special guest today. He's the CMO and co-founder of Freetrade. Viktor, I think the website is freetrade.io. How are you doing today?
Great. Hi, Derek. Thanks for having me on the show. And yes, it's freetrade.io if anyone wants to check us out.
Yeah, no, absolutely. We'll give that plug right in the beginning. Well, Viktor, it's a pleasure to have you on today. And first, I guess we can start here. Freetrade is what a great name that you guys had. And I think it's an interesting. I'll let you kind of talk about what it is that you guys do and things like that. But I know right now it's really building that European base, and it's fascinating to me because even in the 2000s when we had the .com era and a lot of people were getting into trading, Europe as a market never really followed the U.S. markets into that. So just talk about free trade in general, and then what it is that you guys do, what makes go ahead, just tell our audience about it.
Yeah, great. Let's do it. So Freetrade is a neo broker. That's how we would call it here in the UK or in Europe, or a challenger stockbroker. So basically, what we do is zero commission stock trading. You can invest in stocks and ETFs, both UK stocks and ETFs, as well as US stocks via the app. We are app only. That really resonated with the core demographic that we targeted, which is millennials and even younger at this point. And our mission is to get everyone investing. Basically, how we talk about it internally is that our vision is to help people get better financial outcomes. We started this company because we felt very strongly with my co-founders that people are just not really caught into the growth of the world. Basically, you see $1 trillion companies created. Very few people benefit from the level of growth that you can achieve in this world. Meanwhile, the media talks about the erosion of the middle class and how millennials save and invest or don't do that. And it's just insane that you have these amazing opportunities that we have in this day and age, and people just don't benefit from that. So that's the reason why we started Freetrade, and fundamentally it's our founder and CEO Adam Dotz. He was. It's actually a pretty good story. He was a senior manager at KPMG, the financial consulting company, and he has a wife and 3 kids, and despite that, he took the risk. He was sitting pretty in his job, but he saw the market opportunity and the opportunity as well to basically help millions of people across Europe fundamentally. And he started it, and the way I met him is actually really funny. I was on the tube. I saw an advertisement for Crowdcube, the crowdfunding platform in the UK. Equity crowdfunding is really popular here, and I was like, "This is fantastic! I can be an angel investor. I can invest any amount. I don't have to have my solicitor." So I went to the platform. I signed up on Crowdcube, and I invested in the very first crowdfunding round of basically the two primary neobanks or challenger banks here in the UK. Both investments had worked out great. And then I saw Adam with his Freetrade pitch deck on Crowdcube, and I was like, this is fantastic. I absolutely want to have this product. So I looked across my bank accounts. I pulled together all the money that I had. I was maybe left with like £15 until the end of the month. So my girlfriend had to stop me. And I invested everything I had in cash. And it turned out I was the first investor who invested more than £1,000 and wasn't a friend or family member. So we met up, and as they say, the rest is history.
I think what's fascinating about what you said too, and you mentioned a lot of people don't participate in the equity markets. And one of the things I've seen is that there was always a lot of friction. And so I've been trying to think back. I probably got into this in '94, working on Wall Street in the US. And, there was always, I call it friction. And friction in economics is there's some barrier. It could be cost. It could be, it's too tough to sort of get in. But, I remember placing trades and for 100 shares of stock, and the commission would be hundreds of dollars. And then eventually now we have, $0. But I'll be honest. I mean, I've given, talks to very young investors and told them about the value of getting started early and compounding. But there's still this friction. I mean, I'm always fascinated by, like Schwab and Fidelity in the U.S., they do everything that maybe you do and more. But there's something that maybe you're after where to break down that friction, that wall, that barrier that lets somebody say, this is a good idea, let me do this. But then there's something that gets lost for them actually taking the step and getting involved. I mean, so I think that's an interesting thing to think about.
Definitely. And I think it somewhat ties into the other part of your previous question about Europe, which I'm going to talk about in a minute. But I think what you are talking about, Derek, the friction, it's so important, right? Because in the end of the day, it's not like, you look at the Maslow pyramid of what you need to do in a day, right? And there are like fundamental things you need to get done. Like you have to, wake up, eat, get the essential stuff done during your workday. Like investing is not something that you are hard pressed to do. So until it becomes a habit, the best thing that companies like Freetrade we can do is basically removing that friction that prevents you from making your investing experience smooth. And I think that zero commission is not like a magical invention that only one company has like a monopolium on, but it's just part of a broader like toolkit. Uh, how you dismantle friction. Friction is as well, basically you have like a fifth limb in the form of your smartphone right now that's always with you. Bringing investing onto that device is essential because you always have access to that, like literally everywhere, unless you are on a plane. You can be online and you can invest. So that's definitely part of it, making the language accessible and giving people education, and education as well in the form that they are not turned off. So it should not be like an econ class necessarily. Maybe like a fun econ class at school, but fundamentally we are up against competing with everyone else on the internet for people's attention. Like we are up against all the cat gifs on Reddit, all the different ways you can spend your time, your Facebook feed, all that sort of stuff, and making investing something that's like actually interesting and can pull you in is also part of that toolkit. So yeah, I think you are what you say about friction is absolutely true.
I mean, and you mentioned maybe the individuals and millennials. It sounds like that's your target audience is not maybe participating. And, if you just run the numbers, I mean, someone who comes out of, let's say, college, they're probably 20, 21 years old, their first job, even if they just signed up for the, in the US, a 401k or some sort of, systematic investment plan, putting money away every month, the numbers are staggering. I mean, over the S&P 500 in the US over the last, since 1926, the compounded annual growth rate is something like, 10.5%. But it's that getting started. But I mean, it's someone who gets started early has that. I mean, it's the law of numbers, right? It's the compounding effect, and I think it's really important if you can get people started. I think that's a really good goal to have for you and your group.
Yeah, absolutely. And at this point, we see about half of our users coming as newbie investors, and Freetrade is their first time. We kind of think of it as like a badge of honor. We definitely want to service both. We want to build a serious service. You mentioned incumbent companies, and we potentially don't have like each and every of the features that they offer, right? And we are working on it, but we are a new company, only operational barely for 2 years. We still don't have everything. But we want to service both. The mission is to get everyone investing. But when you think of everyone, the emphasis for us is definitely getting new people into investing. Like you said, the numbers are just incredibly in favor of midterm, long term, of course, to invest in the stock market. Of course, I also always have to mention your capital is at risk. So you have to consider that this is not, it's absolutely not a savings account. Of course, as a new investor, that's not how you should think about it. But over time, history has proven, the S&P 500 has given you historically, the numbers differ based on the exact timeline you look at, but 7% return and those kind of numbers, it's just the numbers are incredibly in favor of investing. And the vast majority of people on this planet, they don't know and they don't really have access. And that's what we want to solve.
For a long time, when I would talk to people who haven't invested before, I would always say, look, if nothing else, set aside an amount each month and you can go automatically have your brokerage firm buy shares in, an S&P 500 index fund, right? But one of the things I found is that even though when you own an index fund, and that's, in my opinion, it's if someone getting started, if they were to ask me, I'd say, yeah, throw money in an S&P fund. But there's some disconnect between, buying an index fund and then the companies that are in there. And I'm actually, Victor, leaning more and more now to somebody taking, as you said, it is risk capital, but putting money, and I think, the fractional share development is kind of an amazing thing. But the idea of, maybe owning some companies and, certainly not a recommendation, but maybe you own a piece of Google, a piece of Microsoft or Exxon, whatever it is. But it's just the idea of, hey, I'm going to put a little capital in these companies, and then I'm going to learn the 4 times a year they release earnings. And I'm going to actually use this as a proxy for education. Are you seeing more people attracted to individual stocks? And am I right there that maybe is more interesting to people?
Yeah, that's a great question. So we see different user personas, different customer personas, and there's definitely the ETF investor, but actually a very large percentage of our customer base does invest in individual companies. And I think we are not going to have a fight about the merits of considering individual companies as long as you research and you know what you are doing. And you are taking a bigger risk than with an ETF. If you want to beat a benchmark such as a FTSE All World tracker or S&P 500, you definitely should consider these companies. And the great thing about investing in individual companies, it definitely pulls you in and incentivizes you to research and connect more to the world economy and the individual performance of these companies and how they figure into the world economy. I think that's great to sort of like develop that interest. The biggest, when people ask me who is the biggest competitor of Freetrade, I usually don't talk about, I almost never talk about incumbent companies or anybody like that. Our biggest competitor is the notion is that the world economy is boring, investing is boring. It's not something that you should take an interest in. And actually, that's a fascinating area that shapes our world profoundly. And taking an interest in that is not just it's not just an advantage from your personal investing standpoint, but also an advantage in terms of like how educated you are about the economy. It definitely makes you a more educated, more well-rounded person.
Well, even and I think at the beginning, I don't think neither of us would expect somebody to understand, discounted cash flow and valuation and all those things. But even if and I do think I'll come back to the fractional share point because I think that's a major innovation. But the idea of just net profit margins and how thin some of the margins are, and I think it's a great point, Victor, that just following companies that you own maybe gives you more insight into how businesses make money, how how they're able to hire employers, how there's just a lot there. And I think certainly we know that if you did nothing else than diversify the heck out of your portfolio and buy a broad spectrum, and you can concentrate the risk. But I think that's a great point. I think education's a big thing, and maybe there's some connection. Somebody might be in an Uber cab or a Lyft here in the U.S., or I've ordered something on Amazon, and now you can buy, a fractional share. Are you seeing a lot of people take advantage? By the way, fractional share just means used to be you want a share of Amazon, and you have to come up with whatever it is today, $3,800. And by the way, if that's all you had, certainly buying all one stock is a little risky. But here, what is it, like $10? You could put into one whatever a share of Amazon and build a portfolio. Are you seeing a lot of people take advantage of that? And I think that's a big thing that's happened in our space.
Absolutely, Derek. I actually have a funny story for you because we have fractional shares on Freetrade, right? And when we introduced the feature, we kind of went about it like quite abruptly. So suddenly it's just like, we introduced the UI in a way that you invested like a pound amount, like a cash amount, and you got like the equivalent proportion of whatever you are buying, an Amazon stock or a Tesla stock, even if you just input £10 on the interface, right? And initially, particularly the more experienced members of our investing community, they were quite upset with that change, and we dug into that, and basically they felt very strongly about owning an exact amount of shares for what they told us psychological reasons, but that sort of uprising in our community kind of died down in a couple of days, and then suddenly everyone just started investing with fractional shares. So it's maybe for more experienced investors, it's a little bit of a paradigm shift, but particularly when you are new to it, it just makes sense. Like, why would you buy a full share of Tesla, right? It's kind of like a bucket of water. You can divide it into different cups and glasses. That's how company ownership works, right? And it's a little bit of an arbitrary construct that one share costs this much, and then you have to buy for exactly that amount, right? We think of it as a great equalizer. It's something that makes has people get access to investing like really, really fast.
I think it's amazing, and it's a great development. And I can tell you, some people, and I just go look at 5 years ago. I remember getting somebody excited about investing, and I talked to the person, and he said, "Hey, I bought a share of Coca-Cola." And I said, "That's great." And in my mind, I'm thinking, you probably paid $20 to get in to buy a $50 stock, and if you sell it, that's another 40. That's $40. You got to make like almost 100% to break even. But with costs coming down and the technological advances, but I think this fractional share thing is going to be one of the, maybe I'm biased, right? But I think it's one of the biggest developments in getting people who haven't invested excited about the market. So I'll be curious to see how this takes off in our industry for sure. The other thing I think is really fascinating too, and I go back, I want to switch to just the technology. And you said a great thing earlier about, how everyone has their phone in their pocket. The first trade that I placed when I was in the industry, you took we called them paper tickets, but it was actually a 3 carbon copy thing. And we would write out a ticket at the brokerage firm, and you tear off a copy and you'd put 2 copies somewhere. And then you'd put this other copy in a tube, and you stick the tube into the wall, and it would go down like several floors. And then they would call the trading, they would call the New York Stock Exchange. And a trader would take that call, write something else up on a ticket, give it to a runner. The runner would sprint out, throw elbows left and right, trying to get to the trader on the floor. Finally, the trade gets done, and forget about getting the report back. And now, you were saying, technology has taken leaps and bounds. Costs have come down, but it's this idea of having this thing in their pocket. I mean, this is somebody could be in the tube, as you say, in London, which for those who don't know what that is in the US, it's kind of the subway or the train, and look at somebody's shoes that they're wearing and say, that's interesting. Maybe I'll buy a fractional share of that stock. I mean, that's pretty cool, I think.
Yeah, absolutely. Yeah, and just for accuracy, on the tube, actually, we still don't have phone signal properly. So, but it's not.
Oh, what's going on in London? Come on.
I know. Yeah. That's the big mystery in London. Why is it so hard to implement that? But
okay, so somebody's in a cab. You know, they're one of those black cabs in London, right? So maybe we'll switch but no, that's something. Technology is fascinating from a cost standpoint. I am curious though. There's trade-offs with most of the brokerage firms, the big ones, right? They've gone to zero commissions. You all are at zero commissions. It's a different model though. Can you just talk about in general, either in your space or your Freetrade specifically? So where do revenues come in? Like you're giving a value proposition, right? But you're not getting trading revenue. Are you able to just talk in general about how companies like yours operate in the space and derive revenue?
Absolutely. Yeah, and that was a fascinating trend in the US to see legacy stockbrokers switch to zero commission pricing. I do think that's over time going to happen in Europe as well, but it's going to take potentially a longer process. But from our perspective, so I mean, technology changed everything. Stocks are dematerialized. It used, I mean, charging, like in the UK, some incumbents, they charge £12 per transaction. That's probably $15 or something around that. That's arbitrary. That's like a telco company saying that this is how much I charge you for the minutes or text messages. It still costs the same on the back end, more or less. That was just an arbitrary construct, with technology and with the dematerialization. So we tap into that technology. So we basically built our own investment platform. We call it Invest by Freetrade. So it's a platform that does the heavy lifting of trading, of stockbroking. So basically, we have full control over that, which leads to a lot of advantages. We build that with extreme scalability in mind. And we, so far, knock on wood, we managed to withstand all the surges in traffic that we saw around, when the lockdown started and the US elections and all that sort of stuff. Technology definitely makes things easier and cheaper and more scalable. And it also means a different business model, right? Which is at the core of your question. We don't charge commissions. That's like the number one barrier against investing. Just doesn't make sense. So with the way we make money, we are 100% transparent. There is like one singular web page on our website, freetrade.io/pricing. You find everything there. But I'm going to break it down. There are only a handful of revenue streams that we have. So one is FX revenue. So we charge a modest amount of FX over, you are in the UK, of course, you buy US stocks, you buy it in US dollars. So money gets converted. At this point, that's our primary revenue source. And that scales well across Europe, because if you consider how Europe looks like, is different. It's fundamentally different nations, different countries, very often with different currencies, although euro is prevalent in a number of countries. But that's something that we kind of foresee as scaling well. We think other fintechs such as TransferWise, they did a great job of like introducing a modest but fair FX fee, and it works really well in the case of TransferWise, and we kind of see it working really well for Freetrade as well. Other than that, what we focus on is subscription revenue. So we have sort of similar accounts you have in the US, similar to 401k and Roth IRA. So we have a so-called ISA account, which is a tax-efficient account So we charge £3 per month for that. And we also introduced a premium account, a plus, what we call Freetrade Plus. We charge $9.99 per month for that. You get a vastly bigger stock universe. You get a dedicated customer service team, more features like that. So yeah, these are the main ways we make money. And there was a third one, interest, right? That the interest earned on cash, but the Bank of England made sure that revenue is not meaningful at this point.
Yeah, I was going to say it used to be, that spread between, on the cash. For anyone who doesn't know what that is, it's basically, what do you earn? What do you have to pay out? But yeah, Bank of England seems to be going. Have they gone negative discount rate there yet? Or if not, it's trending that way, right? So
not yet. And by the way, it's not just them. Not to single them out. They are doing the best that they can in this environment across Europe. We are looking at in a few countries potentially negative interest rates already, or very very tiny interest rates.
Yeah, I mean it's maybe we'll have to have you back on. We can talk about economics and stuff, but the interest rates is a fascinating thing to me. But but thinking about, so one of the things so big company here in the U.S. is Robinhood. There's a couple others as these sort of app based, and I'm curious. One of the things Robinhood had some news, with some traders maybe getting to options or leverage and different things. So what types? It sounds like you're really a proponent of education. I assume you've got risk controls, but right now just sort of stocks. Do you allow options or more derivatives, or you want to try and where do you land on those types of things?
Great question. We actually don't provide any options or leverage whatsoever. That's a deliberate decision. We could actually make a lot more money, a lot more revenue if we offer those features or services, but we don't. The way we think about it, the vast majority of the people we want to attract, and that's the mainstream population. It's not financial services professionals. We just don't think they need these products. We think it can have a negative impact on their personal finances because you need a fair amount of experience and proper education to benefit from those more sophisticated or complex features. So we deliberately decided not to provide that. We just think of some of these as toxic products. So while we could make more money, we decided not to pursue those features.
Yeah, I mean, I think we're in the space. I mean, we manage money and we use derivatives, options to hedge. We sell volatility, and I've been in the option space, I guess, 25 years now, and I just there's just a lot that can go wrong. So I think that's interesting. Let's flip around a little bit. One of the things when I look at your website, so I want to ask you kind of on the marketing side. I look at the website and I remember being over in London and I would see these ads all the time for, and now maybe it's different, but, mobile phone providers, you spend, £10 and you get a SIM card, you pop in your phone, you're in London, and it's a great deal. I've seen some of the marketing. I think I saw one picture. It was the back of a phone, not a phone, a food delivery scooter. And so it seems like you guys, and just from my research, doing things a little bit differently. But how are you marketing to this group, and what types of different things are you doing? Because you think about traditional brokerage firms is done a little bit differently. So, am I right there? You guys are doing a little more interesting things from a marketing perspective.
Yeah, we are definitely thoughtful about your marketing has to differ, and also there is the very specific context of currently we are crowdfunding and venture-backed startup. We have to be very thoughtful about how we spend our budget to get the biggest bang for the buck. Basically, we just cannot do the same thing as certain companies here in the market do. Like you would see CFD companies, for example, contract for difference companies. You are probably familiar with them. you would see them advertised left, right, and center, and basically, they have really high customer acquisition costs, but at the same time, they acquire customers. They make on average £2,000 on them. That's FCA research, by the way. That's research from the regulator here in the market. The average person, or well, 80 around 80% of customers would lose money. It depends on the provider. They have to disclose the exact number on their website. So a high percentage of people lose money, on average around £2,000, which is quite a lot of money. And then they churn in a couple of months, which lends itself to a fairly dedicated model to them, which is, just to acquire, go to big lengths with your customer acquisition costs. We just can't do the same. We won't do the same. And we also just don't think that's like particularly attractive, from a brand perspective when a company does that. So what we do is we try to be more creative. One of the things we really rely on is our community, which, from a marketing perspective, is one of the last remaining moats. If you think about what other companies can't have, I mean, they can go and advertise on Google, Facebook, just the same as you. There is no moat there. They can copy a lot of the things that you do, but one of the things that they can't copy is people being loyal to you and advocating you. What worked for us really well as a growth loop was crowdfunding every year. Equity crowdfunding is really big here in the UK, and we raised every year since 2016, and every year we blasted it out of water. Like last year, we raised £1 million in 77 seconds, and we basically we rendered the website of the crowdfunding platform offline, and they unfortunately could not get it up for a day or more. So we had to reorganize that crowdfunding. So we are lucky to have this community, and then it's also part of our ethos to give, to get people investing, right, and get people access to the growth that hopefully Freetrade can achieve. So it's fully within our philosophy, and we rely on them. The best acquisition channel for us is referrals, and we have incentivized referrals that they work really well for us. It's basically sending an invite to your friend, and if they sign up, both you and your friend get a free stock from Freetrade on the house. So that works really well. But we also invested a lot into our design capabilities and into our press relationships. So we are trying to target the cheaper, more scalable acquisition channels, if that makes sense.
Yeah, no, I think it's interesting, and it's from talking to you, and we talked about earlier, reducing that friction and making it easier for people. I think it's fascinating. I mean, as I said before, I mean, all these traditional brokerage firms, at least in the U.S., their costs have come down and things like that. But it almost reminds me of, like we look at Zoom and we look at when the whole stay-at-home lockdown started, right? Everyone. I'm amazed, Zoom, like Microsoft Teams and Google Hangouts and maybe Facebook Live, I don't know, but they do all the stuff that Zoom did, but there was some friction. There was some, like, how to set up a meeting in Teams, and you had to put people's email addresses, but Zoom just figured it out. Like, I'm always fascinated by that, so we were able to sort of figure out reduced customer acquisition costs, make it easier for people. But it sounds like there's maybe some similarities in what you're trying to do in the marketplace and how Zoom sort of capitalized on a space that Microsoft did all that stuff, right? I mean, it's fascinating.
So did Google as well. And I think that's an amazing topic, because if you really want to create the best product in the market, you have to have a singular mindset, an obsession with that particular product. We see other fintechs trying to implement investing, whether that's in the form of giving you 3 ETFs or a couple of hundred US stocks through another provider. That's something you can do. It's not really, it won't make you the leader in that category. You have to have this obsession to make the product the best it can be. And there is still a journey ahead of us in terms of developing our features, but we have this obsession, and it's really important to understand that we are a stockbroker. we are a brokerage and we want to be the best in the world. It's going to be a journey, but without having that focus, just like Zoom did in the context of video calls, you are just not going to achieve the same. Some other companies have like distribution channels that are really great. And, I don't want to name names, but media was, trying to suggest that, them launching free stock trading is going to kill free trade. Absolutely did not. It's just if you are best in the market or you honestly focus on that, you have this obsession that will really take you far.
We talked about cost and reducing cost, and technology is you and I mean, for everyone, I hope you're currently over in England, London. I'm in the U.S. in Arizona, and we're using basically a free voice over internet protocol. I mean, this is free. I mean, I know you spent some time at Google, and maybe we can just think about, Google has given us free email, search, Google Docs. I mean, a lot of people use Microsoft Office, but you can get a free phone number from them. I mean, there's technology is not only just in general, but obviously in the financial and the brokerage space, continues to drive down costs for consumers. And I mean, it's sort of amazing that you think if we were doing this in the 1980s, I don't even know how much this would have cost, right? I mean, for you and I to talk. But I mean, you spend some time in Google. I mean, there's people always say, there's trade-offs, and if you get something for free, you're giving something up. But I mean, I don't know if you have any thoughts on that. But to me, it's sort of amazing all the stuff we can get for free. Maybe that's why there's not as much inflation. There's some consumer deflation. But any thoughts on that?
Yeah, definitely. I think any company that targets a deflationary impact on their category is bound to do well in the marketplace. I mean, when stuff gets cheaper, obviously, I mean, it's an elasticity question as well, and people are more prone to use it. And when something is free, that's like the ultimate. The other level is if Freetrade was Google was paying for you to use Gmail or Google Docs, that would be next level. But yeah, not to get too carried away. It's an interesting conversation, particularly in Europe, right? Because there is a different paradigm how we think about privacy and you being the product in the context of these internet companies, right? But I mean, in the end, the market decides, and people decide that it's absolutely fine for Google to to have access to their data in exchange for using these free services. I think it's been a great driving force behind the internet, and Google did a particularly good job at like being really cost efficient and scaling immensely. The sort of DNA at Google, having been there early, is sort of like how you can do 10x and moonshots. And even on the level where I was at, and basically I was, starting as sort of an entry level kind of chain to my desk, doing my tasks at Google. Even on that level, kind of like the thinking was, okay, what are your OKRs? How are they going to impact the business in a significantly scaling or 10x way? That sort of thinking percolated across the company, and that definitely made a lot of impact. And I think Google did a great job organizing, first of all, hiring really smart people, and then organizing them in a way that all that intellectual horsepower resulted in, everything that is Google now. And a lot of American tech companies, copied that model, tried to replicate that DNA successfully. So yeah, in Europe, I mean, if you talk to my German friends, they take a slightly different view when it comes to Google. So they prefer Firefox over the Chrome browser, for example. And I think the next trend in the internet would be potentially paying for these services and products, and getting a better level of service and potentially better data protection and privacy as well.
Yeah, I think there's definitely trade-offs, and I think some companies are better than others. I mean, obviously, if you get things for free, there's revenue somewhere. But it just amazes me that I don't know if you're familiar with I think they're still around. Well, you know what? I don't know. Radio Shack was a store in the U.S. Radio Shack. Think about Radio Shack as you would go in there, and if you needed batteries, if you needed a walkie-talkie, just an electronics store, right? And somebody did this thing about there's an economist who looked at an old catalog of Radio Shack, and you would have spent like $5,000, and then essentially you had everything currently in your phone. Like you have a Level app on your phone, and it just kind of speaks to this deflationary thing that a lot of technology is doing. I mean, it's sort of kind of an amazing thing. I mean, it's just yeah, and I think Europe is particularly interesting. I've been in the brokerage space, I don't know, since '93, I guess. But I think it was at Schwab at the time in late '90s, and I remember companies trying to break into Europe, and the regulation was tough. There were other barriers to entry. So and it's fascinating to me because Europe, and specifically, we never saw the growth of, let's say, online trading that happened in the .com era. And, it sounds like there's still barriers in Europe, but you've picked a heck of an industry to get into, being a regulatory environment. So is Europe sort of the next, are you seeing, green shoots where it's going to free up a little bit, costs are coming down? I mean, it sounds like this is the opportunity for you, right?
Well, exactly, Derek. The way I think about it is that fintech or category and leaning into regulations and doing it well, doing it properly, it actually will give us Europeans an opportunity to build really massive, meaningful tech companies. We as a continent kind of missed the boat on that. There are amazing tech companies that got created in the US because the environment was correct. Amazing people came together to build these companies. And we kind of missed the boat. But at the same time, the way I like talking about it is that Freetrade is the right company in the right place at the right time because we are in the right category. Fintech, and not just fintech, but investing. The first wave of fintechs in Europe, particularly in the UK, were banks. But that's very useful for consumers. I think banks, to be honest, kind of sucked here in the UK before the appearance of neobanks. And at the same time, current accounts are not exactly the money makers. If they figure out their business model, whether that's mortgages or other types of lending, maybe they will make meaningful revenue. But if you consider investing, that's more of a sector or a niche where you can make revenue because value gets created. All the growth is just more structured structurally toward making revenue. And I think that's the right sort of category here in Europe. People are becoming more entrepreneurial, particularly young people. Europeans are famous for being conservative, kind of like risk avoiders. And honestly, that's how I used to be as well. Particularly me coming from Eastern Europe, it's not, I did not figure there was such thing as investing until a little bit later in life. But that kind of applies for all Europeans. We are we used to be risk avoiders, but that's changing. Young people are more open, more entrepreneurial, and we think it's the right time. If you consider the negative interest rate environment that we have, all these Europeans, over 100 million millennials, they need to do something with their money, right? And we think, as a company, the right answer to that question is going to be investing. If they have midterm, long term in mind, so we think we are the right company in the right place at the right time.
Yeah, no, and so tell me a little about. So I know you're in Europe right now. Any expansion plans? Is this going to be a global endeavor at some point, or right now focusing on Europe? It sounds like that's kind of the sweet spot. But talk a little bit about what the growth plans are.
Definitely. The mission is to get everyone investing, so that includes the entire planet. And the first step is, so we have a foothold here in the UK now. We only foresee improving our market share as well as getting newbie investors investing. And we started running a closed beta testing in the Netherlands and Ireland, primarily to learn about how to expand our product correctly, how KYC processes and the like look like, funding your account, all that sort of stuff that we have to figure out and do really, really well, build a really slick product for the continent. And we decided to set up our European entity in Sweden. It's actually a little bit of a choice that people did not see coming. I think a lot of companies, obviously because of Brexit, they have to choose a European location. They go to Berlin, they go to Amsterdam. We chose Sweden because of the level of talent that we see there, the regulatory environment. So that's going to be our European base, and we've already started hiring in that location. And we also foresee opening further offices in Europe, particularly in Eastern Europe, where there is a high level of engineering talent. But we also have global ambitions, but it would be a little bit early to announce, but we do have plans to go outside Europe in 2021.
All right. Well, that's interesting. Well, look, I think I'm a fan of anything that's going to bring more people into the marketplace and let them participate in sort of the capital appreciation. I mean, I know inflation would be a whole separate topic, but it's money that's just sitting around in cash or in an asset. After inflation is not sort of growing. So I did an episode a couple weeks ago. You can feel free to steal this. I mean, I'm sure you got plenty of ideas as a chief marketing officer of Freetrade. But I said, if you just look around your apartment or your flat, as they would say in London, like you can find something that you're not using anymore and sell it on, eBay or some other. I think it's really an interesting point of how people can find money to invest in their first stock. But I'm a big fan of anything that gets more people investing. And the numbers don't lie, Victor, as we know. It's compounding works, right?
And you know what, Derek? It's such a great idea. So my girlfriend, she owned what I would call a really high number of pairs of shoes, basically very expensive ones as well. Oh, and I think handbags. So she actually signed up for a service that actually warehouses this stuff, and people can, buy it e-commerce, and it gets sent from the warehouse. She doesn't even have to worry about anything. She just sends her stuff to this company, and they take care of everything. And she did not become a millionaire or anything, but she made a decent amount of money that she actually invested in her stocks and ETFs on Freetrade. So, it's such a great idea. I'm seriously considering of stealing this as a sort of a marketing campaign. So I'm really thankful for the idea. And the other thing is inflation, right? So, it's such a big, interesting topic, and, how to think about it and all that stuff. I'd love to discuss it at one point with you at one point later.
Yeah, maybe we'll definitely have you back on at some point. Well, listen, this has been fantastic, Victor. It's interesting to get an insight into a different side of the business. And like I said, I think if you're able to bring investors into the marketplace, break down some barriers, reduce costs, I think it's a great thing. So, Victor, thanks so much for your time. Again, it's freetrade.io, I think you said is the site. I imagine they can go there to check it out, and that's the best place for announcements on future markets, right?
Absolutely. And if you are in the UK, please definitely give us a shot. Download the app and see what you think. And reach out if you have any questions. You can just ping our customer service on the app. You can even tell them that you are looking for Victor, and I'm happy to pick up that conversation if you are a listener of Derek. So, and thanks a lot for having me on the show.
Victor, thanks again. All right, everyone. We'll be back next week with another episode. And as I always say, please share this rather than wasting time writing, and starring, and reviewing and doing all that stuff. So, all right, folks, we'll see you next week.